Good morning, Datatraderpro here, Wednesday, September 14th, pre-market, 8 a.m. Yeah, we're just going to have a very quick pre-market wrap focused only on the block trades right now because that's where you're going to get your levels from. Market volatility is back, thankfully. Summer was a long summer for traders, very narrow ranges. I think the narrowest range for the longest period at 60 years this summer, roughly a 1% S&P range for 60 days. So that was not fun. Very hard to make money. Very hard to sail the boat with no wind, as they say. So hard to make money. We were taking little scraps here and there for most of the summer, but not a lot of big swing opportunities. Commodities moved a bit, indexes not so much. So let's review SPY, what's happened of late. You can see over on the, I believe it was the 6th, yeah, so we had a topping pattern for 3 days. Price couldn't break above. We get a lot of distribution prints up here. You could see the line of late prints. You'd have a pop up. They distribute into it, and you'd see all the late prints. And price just kept failing to get above there. So we called a down move, and finally on the 9th, on the Friday, it broke, and we headed down. We had a lot of buys at the bottom. We also called a bounce at the bottom, and bounce we did. There's a distribution on the top of the pop yesterday. So, the block trades have been, I think the key to reading this market when things have been a little murky on the technical picture simply because things haven't moved that much. So indicators were fairly flat. And really, this is where the block trades shine because you could see these levels very well. A sell, use these as resistance. Big buys at the bottom, use these as support. A sell, use this as resistance, and now likely a buy because we're above this level anyway. 213.24, which is the same range as over here, our buys over here, so we came right down into support. We seem to be holding for now. That is going to go out the window should we break below this level, 213.24, because there's a lot of support along this line, and you don't want to be buying the dip as most people are accustomed to doing, Pavlovian style. Every time we get a little dip, the markets rip right back up. But if we break below this, we're probably going to 210. And I'll show you why 210 again, or the 210 zone, 210 to 210.50. There's an air pocket. There's a volume gap on block trades. So this is a cumulative volume profile chart of only the largest block trades. So only the biggest institutional trades volume is on this volume profile. What we see after the 216 level is that basically, and we're below that now, when we were topping, we came down to the 216 level and then came back up. So that really the big volume here was support, and we came back up and then we broke down through it, and now that's resistance. So really, if we can get through the 213 level, I think we're going to go down to support in 210.50 to 210 region, where you can see big volume support back in here. And right now we're just sitting in this little air pocket here, some volume but not very much. So 213, if 213 breaks, we're probably going to 210.50 or 210. Okay, maybe lower, but we don't know that for now. It's all speculation. I'm going to go back to the index ETFs. I'll show you the Qs and IWM, etc. So the Qs, very similar picture. Broke down. Here's your resistance. Don't know if these are additional sells or buys. I don't like speculating on trades in the middle. They look like buys here, but we popped below. We dropped below them, came back up, and then these late prints were your support. And distribution on the highs, lots of late prints. We dropped, buys on the lows. We're moving back up. So your 116.30 level is going to be your resistance. Your second level, higher level resistance is 117.24, and below 114.78 we have a chance to really drop. Okay, IWM, very similar picture. Your sorry about that. Your higher level resistance 125.15, second level resistance 122.95, 96 region. And then we have some buys in here. So, you know, they may try and take it back up. We have a big OPEX coming on Friday. So, you know, futures expiration, OPEX expiration, it's quarterly, monthly expiration, etc. So everything's expiring. Everything that's important. There's a ton of derivatives, options derivatives and futures derivatives expiring this Friday. So there's a lot of money at stake. What they try to do, usually the game plan is there's a drop in the week before OPEX and a rally up back into OPEX, and it kills premium on both sides. Kills the call holders first and then kills the put holders. So, you know, market largely has become a game of burning options premium. So, you know, look out for these kinds of moves. We may have a run back into OPEX. We definitely have some buy on the lows. If we break these lows, 120.78, obviously we're going down. All right, even some prints on the DIA, which doesn't get a ton of prints, but you can see very clear sells, clear buys, and on the high, some late sell prints. No live prints, but a strong turn down, and all the late prints showed up. So, okay, let's look at the volatility space. Volatility space had a good run finally. Amazing. Yay, a round of applause. After having been beaten up more so than any time in the last few years, I think, because of the really narrow range, low historical volatility environment, VXX, UVXY got killed basically, and as they will in an up market, as they will in a flat market. So it's really only in a down market that they'll move in the positive direction. Okay, so we have a move up. We have a lot of what looks like sell prints and prices turned down. So this goes along the lines with maybe that there's an OPEX rally brewing, and probably will start today. If we're incorrect, VXX will break above these, the highest of the prints, 42.10. So, you know, this has come it's made a $10 move, which is roughly almost a 30% move in the last few sessions. So that's a pretty good move already in vol, and I wouldn't be surprised by some bleed back. Obviously our support 36.28. UVXY, somebody ding had a nice little trade here. 550,000 shares, 1680. Looks like they're still holding unless they parceled it out and have been distributing it all the way up. We don't know that yet, but price has certainly turned down off the high. So the high 25.75 from 1680. That's, you know, if they sell up around here, or if they distributed that large block in smaller chunks up here, they did pretty well. It's a $9 move or thereabouts. So anyway, XIV has some small blocks, but nothing significant. This looked like a first attempt at a buy, and then it dropped lower. So we'll have to keep an eye on XIV. Obviously, XIV is the inverse of VXX. Okay, I think I want to show you something in the bond space, because the bonds have been moving. So there was a large sell. Unfortunately, it's blocked out. You can just see the bottom of it here. A 14.5 million share print on TLT sell at the last local high, and really nothing since then. So we're waiting for a buy. Obviously, there's a lot of talk about bonds having topped in a generational top, and I'll explain that a little bit. Bonds have been rallying for years, an entire generation bond rally really, but they really picked up as interest rates have come down. post 2008, 2009 financial crash. The markets have lifted, largely on low interest rates and easing policy and stock buybacks and easy credit and all that sort of thing. But we won't delve too much into that. The main point is that bond prices are the opposite of yield rates, right? So as yields have come down, bonds have gone up. Now people are thinking that the Fed's basically out of bullets. There's really nowhere to go but hike. We may have seen a low in rates and therefore a top in bonds. So the bond market, I wouldn't be looking for long-term longs in the bond market, but that's the general thinking out there by some fairly smart folks, is that the bond market has either topped or is about to top. It may get a one more high, but is in the process of a generational topping move. So there may be some very good bond trading opportunities to the downside in the next, if this plays out, it's going to be for years, basically. So look, we have a big sell. We don't have a corresponding buy at the bottom. I think bonds have maybe another couple of moves in them because the Fed's always up to hijinks, and I think we may get a pop shortly, and I think a rate hike is unlikely in next week Fed meeting. Anyway, junk bonds buy at the low. Price 3601. HYG, which is high yield corporate credit, 8540. Pretty good buy here. These go along with the idea of maybe an index pop as well, because people are buying credit, expecting credit to go up. Okay, metals space has been a little less clear in the last day or two. Very clear before then. Off this chart we had some really big buys and accumulation down in the 124s, 123s on GLD, and some big sell prints up here. We may be seeing the start of accumulation here for a second pop-up if we drop below them. So really we can't drop below 124.80s, and if we get down below 124.80s, we're probably going to a new low on gold, on metals. GDX, big print at the bottom. GDX does get a lot of rebalancing prints from its related leverage ETFs, so I'm a little less focused on watching block trades on GDX because they always come in at exactly 4 p.m., which to me are rebalancing trades. But anyway, they do often nonetheless mark the highs and lows of moves, such as here, right? So, okay, SLV, silver. We've had some big sells up here. Again, I tend to ignore the trades in the middle unless we're using them for support or resistance, because it's not very clear what the intentions of this trade are. It's very clear that we can see that these are sells. They're right on the high. There's a bunch of prints. Price dropped immediately below. It never challenged that level, and we went down. So you would short there and use this as your stop, basically just above here. Okay? We may be getting some accumulation down on lows here. That may be the start of it. We're not sure, but definitely it looks like when price popped a little bit, we're getting some buys in here. So we may be due for another metals run up, but I'd really like to see some big volume prints come in there. Okay, energy. Last thing I really want to cover, not a lot happening on XLE yet. Some buys on the low, but nothing really to counter the huge sells we've seen lately. USO, again, big sells, maybe the start of some buys here, but if we get below the last low, which is 10.18 roughly, and we're very close to that, I wouldn't count on a new high right now. If price can turn up, then it's got to get through 10.64 and 10.96, and if it gets through there, we could go way up. UNG has just been a monster. It just keeps going and going. Every time it drops there are block buys, and it pops back up. So UNG may have had its all-time low last year at 160. Natural gas, the futures at 160. UNG's a ETF based on the futures contracts in natural gas. Watch for a seasonal drop, but then UNG to make a series of new highs this winter. I believe that that's the case. I believe natural gas is put in the long-term bottom. Okay, so I think that's it. That's it for today. Hope you enjoyed, and join us next time. Thanks very much. Bye.